In a recent interview, Cathie Wood of ARK Invest said Tesla's humanoid bot will be the biggest physical AI opportunity. And over this week, we've seen a wave of Tesla stock upgrades. At least 11 institutional analysts raised price targets, with 9 of those over $500 now. But what is even more important is that the reason these firms are raising is their recognition that yes, Tesla is now a physical AI company. Tesla bulls are used to hearing Adam Jonas of Morgan Stanley being bullish, but now even Bank of America is using the term physical AI. While they think the current valuation is stretched, they assign roughly 45% of Tesla's total value to its robotaxi business, 19% to Optimus, 17% to FSD, 12% to core auto, and 6% to energy. Elon Musk has done a great job changing the narrative by proving once and for all how Tesla is the leader in real-world AI. Tesla Vice President of AI, Asha Kalaswamy, made a point that Elon's guidance made it such that the same neural network and real-world simulation system is applicable for Optimus. Today, we're joined by Larry Goldberg. He's a serial entrepreneur and has been an active venture capital investor for the last decade. Check out his new venture called Lumicenti.com. Thank you, Larry.
Great to be here, Herbert.
So you and I really appreciate ARK Invest, Cathie Wood. She's been calling it correctly. She's one of those that are usually pretty bullish, and things are now happening the way she predicted. And now we're watching all the institutions copying her. She's been talking about Tesla being an AI company. So let's take a look here. Basically, she was on CNBC, and she said Tesla's humanoid robots will be the biggest AI opportunity. She's early, but once software models mature, the next frontier is putting that intelligence into physical systems that can act where every factory, warehouse, and logistics network becomes a customer.
Applications of AI, we think that this investment will pay off. And I think the chaser is going to be humanoid robots. And I think that is going to be the biggest of all the embodied AI opportunities.
Well, Cathie, the concern in the market right now is that the pace of innovation doesn't necessarily justify the premiums that we're seeing for some of these names. How would you respond to that?
Yes, well, if we're right and the growth continues to accelerate in this space, we think that the growth that the valuations will make sense longer term. So you really do have to have a longer term time horizon, which we do. We have a 5-year investment time horizon. I'm not saying there will never be any corrections. Of course there will, as many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Yeah, it's very refreshing to see somebody got a long-term view. Yeah, one of the fund managers.
Yeah, I mean, the Wall Street analysts famously and probably reasonably limit their line of sight to 1 year. What they're doing is they're struggling with the fact that Tesla is like a startup. And they've never had to value venture investments before. Now, the truth of the matter is that all of the, Magnificent Seven have a component of venture within them. And they're all now on the cusp, or most of them are on the cusp of this AI revolution. And so valuing that has become, the real, difficulty. I mean, everybody's on this thing. Is it a bubble? Isn't it a bubble? And it could well prove that we have, a little bit of a collapse to get through and to get to the other side. It happens in tech all the time. People, they become disillusioned for the moment. It's not moving quite as quickly as they imagined. The monetization isn't happening as quickly as it should. And then, there's this panic in the market. The market will drop by, 30%, 50%, some ridiculous number. And then, the realization. So there's this trough of disillusion, they call it. There's this valley of death, all these great names they have for it. And of course, there was the dot-com bust and everybody, thinks about that. So yes, there's a lot of anxiety and nervousness in the market, and you see it from week to week, you'll see the market climb, and then suddenly there'll be, like a pullback of 2, 3, 4, 5%, and then it'll climb again. And so it's a very difficult world to live in, the world of, venture. And we're in the world of venture. Like it or not, even though we're looking at $1 trillion valuations for these Magnificent Seven companies, we're living in the world of, is this innovation everything we think it is? Is there a danger? What is the outcome? Who's the winner going to be? All of this stuff is going on. And it's very tough for the analysts who want exact estimates of what the earnings are going to be. So, yeah, they're nervous.
We're going to actually cover that in another segment where we're going to show the Mag 7 and institutional ownership versus retail and insider ownership. Tesla is actually leading at 50, but it's now 50-50. And so it does matter what institutions think, but I like the way you positioned it, which is really true, right? They lived in this old world. They've lived in that forever. Then now they're in this AI world, and then they got to go, oh, but AI is not proving that it's a product that's going to actually show you revenues, earnings. Like they can't calculate it, and then it shows up, and then it shows up. And so they're going to need to start thinking of every company as an AI company, as a startup, as you've been saying.
Yeah, Gary Black lectured us 6 months ago, 8 months ago, that you can't build an estimate or an analysis of a product that hasn't proven there is a market for it and there's a TAM for it and there's a proven basis for it, and told us it can't be done. We're looking at a product, Optimus, that many think is only going to generate real income in 2028, maybe 2030. Now, I saw an analysis last week done by a very, very knowledgeable analyst that showed the level of difficulty of the robot versus the level of difficulty for FSD, and that's only going to become viable in 2030. Well, here we are, 2025. That's 5 years out. Gary Black would never do an analysis of a sale of a product that will only be coming to the market in 2030, and we don't know the TAM for that market. We don't even know what the price of that bot is going to be. So, yeah, it's a lot of discomfort. And it's interesting that Cathie's valuation of the company does not include the bot.
The bot yet. Yeah. That is why it's interesting that actually Bank of America is actually already in their sum of parts and already giving Optimus a valuation. We'll get there. Okay, lots to cover here. We've got, here's what has happened over the week, a summary. Thank you for Paige putting this together. We've reported on most of these. Wedbush, that's Dan Ives, is now $600. Baird, $548, TD Cowen. These are all stock price upgrades. RBC Capital, Mizuho, Cantor, and then down below, you see that almost everybody's over 500 now, except for Truist, Benchmark, and Freedom. They're over $406. So we know that Morgan Stanley, Adam Jonas, right? He's already been referring to Tesla as an AI company. He said just last week on Monday that autonomy is solved. He's calling it. Now he's saying that he thinks that the Tesla's investment in xAI deserves more attention. Among a range of possibilities, we believe the proposal may be a testing of the waters for further investment in cooperation, Tesla and xAI. Tesla's progress in robotics would benefit from xAI's progress in AGI. Data sharing between the two related parties ultimately benefit from closer cooperation. So at least they're talking about it. Look at this. Their overweight rating is $800 on their bull case. So we know that Adam Jonas, but here's the interesting thing, I think, is Bank of America. So they're not at 500, but they call Tesla a physical AI company. And they're already...
No, they don't just call it a company. They call it a leader. Physical AI leader.
Leader, right. So we see Tesla as the company with the largest advantage in autonomous and physical AI. I just love that they're actually using those words. And then the best part, of course, is... by the way, just FYI, they raised the prices to $471 from $341, and thank you, Christopher Dungeon. He said, here's the here's the history, right? They raised it to 350, they raised it to 400, they raised it to 490, they lowered it to 380, they lowered it to 305, they raised it to 341, now they raised it to 471, all in the course of 1 year.
But all those raises and drops are within a few points of what the price was at that time.
That's right. That's a very good point. Probably that. So here's the interesting part was when they actually give you, so they raised it to 471. Here's the sum of the parts valuation. And I thought this was very interesting. 45% of this 471 is its robotaxi business. 19% to Optimus. That's a big number for Optimus that doesn't exist.
It's very
70% to FSD. This is now another theme. This last week, we started noticing many new institutional analysts basically recognizing that FSD is going to contribute significantly to earnings because they see that FSD 14, they remember that we were single digit adoption, and maybe we'll get to, now people are realizing it is going to be much higher than people realize. 12% to core auto, 6% to energy. This is great. But they do warn here that the valuation is stretched. So anyways, but that's still, I think, correct. This is really nice. What do you think about that?
It's their discomfort over the current share price that's actually being reflected. Because notice that they've always put their target to be a little bit, a couple of percentage points above the current share price.
Yeah.
And so they're discomforted by the current share price. And that's this whole, the syndrome that I drew a little bit earlier. The syndrome is, it's not really, really, really real, but we can't ignore the actual price. So let's equivocate a little bit. But look, that's a very high percentage to allocate to the robot.
Robotaxi, 45%, 19% to Optimus. Yes.
Yeah. And it's interesting that ARC, that really values innovation very carefully, is not prepared to put a valuation on the robot. Yeah, I saw some work this last week that shows the bot only being delivered in 2030. Mm-hmm. And that's based upon the level of complexity versus the level of complexity or the degree of difficulty, really, of FSD, of robotaxi. And this calculation was that an Optimus robot is like 100,000, some huge level of difficulty greater than FSD, because the degrees of freedom is so much greater, and the variation of work is so much greater, blah, blah, blah. And the number of parts, the moving parts are so many, and so on and so on and so on. And so they say it's 100,000 times more difficult. And then they parse out how long it took FSD, and they figured out where FSD is right now and how it can get to control the bot. And so they're calling a 2030 release.
Sorry, this is ARK Invest or some other report?
No, I can't disclose because it's not published work yet. But there is now I did an analysis which shows a very different level of degree of difficulty in terms of versus full self-driving, because with full self-driving you have this zero margin of risk, margin of safety for risk, zero. I mean, you could calculate it to the third or fourth decimal point and you still got zeros there. Whereas with a bot, depending on the task, let me rephrase that, a very large percentage of the tasks that you can put them to have got very large tolerance of risk. If you drop a cup in a household, it's not really that big a deal. So the degree of difficulty may be very much greater because of the variations of tasks with the robot. But the level of tolerance of safety is, huge compared to the car. So when you factor that out, then you get a very different result in terms of when the bot will be available. In other words, what I'm saying is I think the bot is going to be introduced much earlier. I'm looking at 26, 27, and become profitable in 28, or becoming commercially viable in 28. whereas some of these studies are showing 2030 and beyond. Suffice it to say that the level of uncertainty is very high. So to factor that into evaluation at this point is very unusual for an analyst, which leads me to the statement that I think they're reaching to find a valuation so that they can match it to the share price.
I agree with you. I agree everything you just said. I did a show with Phil Bissell, and he explained how the neural network that Tesla's created and the system that they created, simulation, it can be used for both vehicles and humanoid bots.
Right.
And
well,
but
they've
for
already
vehicles,
demonstrated that.
there's only two outputs, which is acceleration, deceleration, and steering. But for a bot, 23 degrees of freedom, every single little finger, all the movements.
That's what I mean about the level of complexity.
So that introduces, let's say you'd say 30 different degrees of freedom or even more. That's like infinitely more, like more than the molecules in the universe potential positions. But I agree with you that the first use cases could just be pick and place, and you've got bots like Digit already doing pick and place. You don't need all that movement. You just grab and move. So we'll see. But I totally agree with everything you said. So earlier you were talking about how Mag 7 are all AI companies, but these institutions need to be aware of, because they control this. So this is Phil Bissell showing that Tesla versus the Mag 7. The highest retail and insider ownership is actually Tesla at 49.4%. So this is not in order, but you can see down below here, it's 49% down here. This is institutional percentages. So
institutional percentage is the lowest in Tesla of all. And that makes sense to me.
Yeah.
Because in Tesla, the valuation component of the future product, not the existing product, but the future product, is dramatically higher than it is for the others. By the way, Meta, that's not exact. Meta also has a very large component of unsolved technology in their valuation, in their business model. But that's kind of an aside.
Yeah. And I mean, I think this is the only point, but 50%. So for Tesla, 50% retail, 50% institutions. It does matter how their narrative works, how they're thinking of the company, and what they're doing. So that's the case. And the current 5 largest shareholders, excluding Elon, is Vanguard, BlackRock, State Street, Fidelity, and JP Morgan. And then you can see that Vanguard is going to vote in the last year's 2018 pay package. They voted for it, BlackRock for it, State Street voted against, and they're big, 52 billion, Fidelity for, and JP Morgan for. So hopefully we have something similar to that. So they do matter.
It's not a slam dunk, by the way. It's not, just go back. That's not a slam dunk. I think there are probably questions being asked in each of those 4 institutions about whether they can vote for the new package, even though they voted for the old package. So I think it's not a slam dunk. I think there is possibility that they will vote against. Sure. Honestly, I don't think they have enough votes to vote against it, because I think, anyway, please go ahead.
Yeah, so you're just saying it's not 95% chance that it's going to succeed. You think that you have to...
No, I think the vote is going to succeed, but despite the fact that one or more of these institutions may change their vote for this package compared to the previous package.
Gotcha. Understood. Thank you for that. Yeah, so unlike last year's vote, Elon and Kimball can both participate in this year's vote because now they're reincorporated to Texas, but we should not get complacent. So I'm just telling folks.
Yeah, that's what leads to my confidence that it's going to pass, whether or not we get consistency from these other institutions.
Okay. And then I just wanted to point out here, too, that Ashok Alaswamy, he did this fantastic presentation. He posted it on YouTube, and he explained exactly how does Tesla's FSD, the kind of infrastructure they put in, how it works. It's fantastic. He explained it all. And at the end, I'm not going to go through this because I've done a show on this before, but at the end, he explained that Tesla's work on on all this for robotaxi crosses over to Optimus. Same neural networks will power Optimus humanoid robot. The same video generation system is now being applied to Optimus. The system can simulate and plan movement for robots, adapting easily to new forms. It's any physical AI. This is what they've done, and it's pretty impressive. The real world simulation is real. It looks like a real video. It doesn't look at all like a fake video. It's actually because it used real video to create this new real world simulation, and that matters. And then that's why you can't just have another company, like I say, Nvidia has their own simulation engine, that all of a sudden they're going to catch up. Elon just said yesterday, it's very easy to get good, but it's really hard to get great. And so that's referring to autonomy.
Yeah, we see it. I mean, we see it when we see this massive improvement to version 14. When I say massive, I mean version 13 was so good that version 14, only if you really know about these two versions, you actually tell the difference. But notwithstanding the improvement, there's still these deficits, and some of the deficits are actually regressions, which earlier versions handled well, and the newer version is still experimental on. So, yeah, it's you can see the transition, and you can tell the transition, but it becomes very subtle when you get to these very high levels of functionality.
We're going to do a show tomorrow that's going to go deep into the differences between 14.1.4 and the previous, and some great things that it can now do, what does sentient mean, all that. But the point here is that Tesla has created a whole thing that they've been working on: supercomputers, neural networks, video data in, billions of data in, and then coming out with actions, robot action, physical AI. They apply it to the bot vehicles, and that's why Elon refers to that as a bot on wheels. Now they're going to apply it to the Optimus. And so this is physical AI. And they're laying it out for you, but it takes this much effort to get to true physical AI. And then Elon replied to that post by Ashok saying, Optimus AI will be great. Any comments on that? Like this, just the whole thing that it's one platform that's going to...
I mean, how can I gainsay what Elon's saying? I mean, he knows a little bit more about the subject than I. I hate to admit it, but that's just the reality. Look, it's highly probable that they're going to solve the bot. Highly probable. I don't say that they've done it yet. We've talked about the degrees of difficulty, the degrees of freedom. I personally think that the difference between the car and the bot is not as great as would be that you would think, because of the because of the greater degrees of freedom, simply because of the need in the car to be so ultimately safe versus the robot. Robot can tolerate quite a lot of variability. So, yeah, I mean, I'm absolutely aligned with Elon. And even if I weren't, my opinion wouldn't count.
I want to ask you this question about AI5. I know you follow this so closely.
Yeah.
At the earnings call, Elon paused everything, said, I'm going to go on a long conversation here. Let me share you what we're doing with AI5.
Yeah.
I'm going to play a video from All In Podcast where they basically talked about AI5 reporting. Shamat was saying that, just was very impressed with what Elon said. AI5 is going to be 40 times better than AI4. I'm going to play this video, but before I do that, I wanted to ask you, Larry, do you think that you need to wait for AI5, which may come end of 2026, end of next year, before robotaxi can be done fully, 20 times safer than human, 10 times safer than human, or does it need to be 10 times safer to roll out like this, and then for the bot? So do you want to answer that first, or do you want to listen to the video first?
I will say that I think the bot is going to benefit from the AI5 more than the car is going to benefit from AI5. I think AI5 gives a huge amount of space to the developer to not only improve, but to add functionality to the vehicle, and even more impressively, to add the ability to become a virtual supercomputer. That is for sure. I think AI5 brings a lot more to the bot than it brings to the car. Mainly because I think the amount of energy needed for a given function is going to be much lower now with AI5 than with AI4, which, by the way, is a benefit to the vehicle as well, quite a big benefit to the vehicle as well. So I think AI4 is going to ace it. I think AI3 is going to be able to deliver it, but I think AI5 is going to be really the liberating device for the bot. That's my personal belief.
I'm going to play the clip of what Elon actually said at the earnings call and then play the 1 minute clip of Shamat at All In podcast.
Interesting. Yeah, I'm looking forward to this.
But I want you to think, the question I'm going to ask you after this is, could Nvidia's chip, because they just announced a partnership with Uber, could that chip equal AI5 chip, or does it matter? You know, it's good enough, that kind of stuff. Okay, let's listen in.
Now with the AI5, and here's, I need to make a point of clarification relative to some comments I've made publicly before, which is we're actually going to focus both TSMC and Samsung initially on AI5. So the AI5 chip design by Tesla is, I think it's an amazing design. I've spent almost every weekend for the last few months with the chip design team working on AI5. And I don't hand out praise easily, but I have to say that I think the Tesla chip team is really designing an incredible chip here. This is, by some metrics, the AI5 chip will be 40 times better than the AI4 chip. Not 40%, 40 times. Because we have a detailed understanding of the entire software and hardware stack. So we're designing the hardware to address all of the pain points in software. So I don't think there really isn't anyone that's doing this, the entire stack, all the way through real world, calibrating against the real world where you've got cars and robots in real world. That, like, we know what the chip needs to do, and we know what, just as importantly, we know what the chip doesn't need to do.
He had these multiple efforts with Dojo and other stuff that he merged into one unit. And the quote is pretty incredible. We're going to focus TSMC and Samsung on AI5. The chip design is an amazing design. I've spent almost every weekend the last few months with the chip design on AI5. By some metrics, it will be 40x better than AI4. We have a detailed understanding of the entire stack. With AI5, we deleted the legacy GPU. It basically is a GPU. We also deleted the image signal processor. This is a beautiful chip. I've poured so much life energy into this personally. It will be a real winner. Why is AI5 so important? What AI5 is the building block of a system that I think you'll start to see, not just in the cybercabs, but also in Optimus. So from a functional technology perspective, there's been a leap, and that leap is going to come into the market. That was the first thing he said.
Thoughts on that, Larry?
Yeah, I mean, what Chamath is saying really echoes my own feeling. I mean, when you have that kind of leap of functionality in hardware, then it opens up new vistas. We don't even know what those vistas are because we haven't yet begun to experience, the full capability of FSD, but I'm certain that it's going to open many new directions. But I honestly believe that AI5 is a lot more important for the bot than it is for the car.
Okay.
I think for the car, it offers vistas of additional functionality over and above FSD. I don't think that FSD will be impaired by not having AI5. I just think it'll be enhanced in terms of additional bells and whistles, additional functionality, new opportunities for revenue. But and particularly, by the way, for the larger form factors like the Robovan, for example. But for the bot, I think the additional memory is going to be very important because I think the bot is going to have to do quite a lot of inference. In fact, a large amount of inference. And I've been thinking up to now that, bot pods in industry are going to have a local computer to do a lot of the processing for them. With AI5, I think we probably get past that point and we can do, a lot of inference apart from managing the bot for the industrial functionality. So, this opens vistas. Every time Tesla have done a chip, it's opened vistas. Even Dojo, if you think about it, even though it failed, it was very successful in that it taught them, how to integrate a large-scale computer that does both training and inference. And, for a long time, I've held that training and inference is going to become one function. And I think AI5 is kind of bringing us into that world. And so I think AI5 is the doorway into a new approach to AI. And I think we'll see the evolution of that into AI6. Very exciting roadmap.
Okay, now that's Tesla's Optimus is going to use AI5, but Nvidia has partnered with 11, humanoid other vendors, and they're going to use Nvidia's chip. How do you compare Nvidia's capabilities versus Tesla's AI5 chips?
Nvidia is a vendor. A vendor has to make, the best sort of common chip, the best common combination of functionality required for all their customers. Tesla has one customer. So there's a trade-off. The trade-off is Nvidia will have a lot more capital, a lot more input, and will have a lot more requirements, a lot more testing, and will be more generalized. Tesla will have a lot less of that, and will be very specific. Tesla will go deeper, Nvidia will go broader. Which is better? Depends on what you're trying to achieve. I'm almost certain that the Tesla chip, together with the Tesla hardware, will be a more functional delivery. I think it'll be the premium in the marketplace. I think the others will be very competitive in the marketplace because it's kind of like Apple using its own chip versus the Intel chip or the, Broadcom chip. That's the kind of argument. But remember, Tesla has a huge lead. And so, and it's not just the chip. It's the approach. And so right now, the Nvidia self-driving board right now is very expensive and it's really focused on LiDAR. They've got a long way to go. They've got 5 years to catch up in, and I'm sure they'll catch up, but they'll make a more generalized solution. Tesla will make a very focused solution. And so that kind of battle goes on in the marketplace all the time.
Yeah, very well explained, Larry. So Tesla, by the institutional analysts, they're now calling Tesla a physical AI company. They've got the platform in place. It can be used for Optimus. It's looking good. And now AI5 is coming in next year. So it's all about Elon. He knew this was coming.
Yeah, we shouldn't be too sure it'll arrive next year.
I agree with you.
Put a little bit of caution around that.
Yeah, I agree with you. I wouldn't hold my breath on it. But when you hear Elon saying he's already been working like really heavily on it for the last several months, now, it's he's got a sense of urgency. He'll push it further, faster. But yes, this is a major. It still boggles my mind. I was trying to explain this to my wife recently. She's very big onto Nvidia, and of course she should be. But it's like, do you realize Tesla has a whole GPU division that's like doing something similar? It's like, what? It's massive. Thank you, Larry. So Larry, follow him on his X account at Tesla Larry. Check out his new venture, lumacenti.com, and you can take a look at what kind of he helps individuals who want to invest. Check out lumacenti.com. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.